Is the bear market over and we're going back to all-time highs? A lot of people may think that this is the case. But in today's video, I want to talk about the potential dangers or the potential what you would call a bull trap that could be happening currently in the markets and the overall state of the economy. And kind of we're going to be going from here and where should we be putting our money. So make sure you watch this whole video. It's going to be super interesting. Some of the statistics I'll bring to you guys. And of course, before we get into the video, make sure you hit the like button, subscribe, comment down below so it helps this video push out to more people and they can get more financially educated just like you are. We all might have seen in the media recently that we're talking about the NASDAQ, which includes the top 100 tech companies in the world, being back in a bull market. The definition of a bull market is 20% gain from the bottom to the top. Now, a lot of people might be seeing this in the news and be like, oh wow, we're back in a bull market. It's time to put in my savings and start investing at the very top. Well, we gotta understand that there's been 3 times that the 20% rally from the bottom in 2008 and multiple times in 2000 when we had both long-term bull markets. And now we currently have experienced twice. Earlier last year, we saw a 20% rally in the NASDAQ before guess what happened? Yes, we broke new lows in the late summer months. We have to be careful what we're reading in the news media because a lot of times it can be misinformation and out of context without helping you to make the best financial decisions. But that's why you come and watch my channel so I can keep you updated. Let's quickly talk about the supply of money. What is the supply of money? That is how much money is out there that we talk about, the dollar that they're printing. It's actually coming down. Now you might be thinking, Antonio, that's a great thing, right? We had a high amounts of inflation. If the amount of money that's in the supply is actually lowering, it means that inflation will go down, right? Well, you may be right, but it only has ever happened 4 other times in history in the last 150 years. And each time that it has happened, guess what followed up? You guessed right, a recession, and a lot of times a really strong recession and even a depression. Because we have to be careful how much money we're pulling out of the system. Because yes, you might have less money, but then with less money, people have less money to spend, buy things, invest their money, go out and kind of push the economy to keep growing. So every time the money supply hit a negative 2% or less, which we currently are, a depression, recession has happened. And a lot of times it was in combination with stagflation. Essentially, this means that unemployment goes up as high as 12%. Well, guess what happened? Wages, costs of their homes, savings all start going lower. So yes, you are getting an increase of unemployment, but everything else is going down. So then you're getting the worst of both worlds. People have less money, people lost their jobs, their savings are being depleted, and guess what happens? A really bad recession happens. Now you may say, hey Antonio, unemployment is at all-time low, so how can we expect unemployment to go higher? How can you guess that if things are looking really good? That actually is the issue itself. When unemployment is near all-time lows, it always has followed up with, guess what? A recession and really high levels of unemployment. It's kind of like things will push at a certain level until finally something breaks and then unemployment skyrockets. But now what is going to be this trigger effect of something breaking? Well, it's always going to come down to the Federal Reserve and interest rates. We know that inflation is still high in the 6% and it doesn't seem to be coming down anytime soon, as yes, it has made some progress, but guess what? It's still 3 times more than what their goal is of 2%. Now, we already saw the second biggest bank collapse in US history and the third biggest back-to-back. And with interest rates more than likely still rising a bit higher, it could put a lot more pressure on these banking systems. And with a savings rate being as low as 2007, this is a bad spell for the overall economy. If you're not familiar with GDP, it is the gross domestic product, which means how much is your country growing? How much is it producing? Is it bigger? Is it stronger? Right? The more is always better because it means your country is growing exponentially. We have an average of 3% growth per quarter. So there's something called the Atlanta Fed GPD now, which shows you what is the forecast of our growth, right? And usually it's around 3%, right? That shows it's good growth and we're good to go. However, somewhere between 2 to 3%, maybe slightly higher. Anytime it's below 2%, it shows either in the 1% growth or lower, it is usually not so great and it's showing potential signs of a future recessions or it shows economic tightening. While the Atlanta Fed GDP now is currently at 1.7%. And the reason being, it is because of manufacturing in the United States. a report called the ISM Manufacturing came out. And this report is usually read as 0 to 100. If you're 50%, you're neutral. Above 50%, it means you're good. Below 50%, it is not so good. Well, this report came out at 46%, which is not good. It means that the economic manufacturing in the United States is currently coming down and lowering. This is so important because it impacts not only the stock market, but also people's job. If the manufacturing sector is not strong, people are going to be losing jobs because there's not going to be as much demand out there. So companies are going to have no other decision but to have to fire people, which is not great for our economy, as it will mean our economy is slowing down. For example, today we saw the manufacturing sector of the S&P 500 get completely destroyed. That's why you might have seen the Nasdaq doing somewhat well, but you look at the Dow, when you have a lot more of these manufacturing companies in it, which really struggle. Ticker symbols like CAT, ticker symbols like Walmart, and some of those other companies that are in the manufacturing sector. But I'm not here to scare you guys and make you think we're in some kind of doom recession that we're all going to be screwed. I'm here to kind of educate you guys and not fall for those financial media that may be having you chasing all the tops and invest when the market might be towards the highs, where more than likely a pullback or potentially a new low in the year could be coming. So keep investing, keep dollar cost averaging is a high conviction place, but just be smart with your money. Don't waste your money on expensive stuff now because the economy might be coming lower, and having money in your savings is not just more safe for you, but it is also a great opportunity to then spend that money during a recession, acquire good assets like stocks, real estate, and other things, even businesses you could buy at a cheap discounted price, and then make that money when the market comes back up. A recession, a depression, all these things are just part of the economy. There's no ways around it. We're going to have to experience it through our lifetime. And more likely will be that it's not going to be the only one we're going to experience through our lifetime. It's just being smart and kind of making the best out of them and really use those periods of time to really grow our net worth. Because I'm actually really looking forward to prices of things to come down. And we're seeing the real estate market really not wanting to come down, but with higher interest rates, still being extremely high, people don't have money in their savings, and mortgage applications being at the lowest level since the 90s, more likely they will be coming down, and it'll be a perfect time for me to have money saved up and attack and get some of those deals. So I hope you guys will be doing the same and stay financially educated. As always, make sure you hit the like, follow, subscribe button, and peace.